then this is the time frame you want to focus on. Now, from a technical point of view, guys, we could not be in a better spot to at least start thinking about setting ourselves up for the next cycle in Bitcoin. Everything goes through that cycle. And of course, some of this, whether it's a micro cycle or a macro cycle, but we're talking about macro cycles here. Now, what makes this cycle so difficult to ascertain is that sometimes the left leg and the right, or the left foot and the right foot are not relatively even like this. They're up like this. And sometimes that left foot is higher than the right foot. But it's all the same cycle repeating itself, macro and micro. So when you look at this, this is really just this cycle, right? You see that? That's the cycle I just drew with the left foot higher than the right foot. All right. And when you see this cycle here, that is nothing more than this one. That's where the left foot is lower than your right one, right? And when you look at this one, that's this one, right? And when you look at this one, that's this one. And when you look at the macro ones, right? That's this one, all right? And the even one, where they're even, that's this one, right? Even. And if you even out some of the noise in your macro, where are we now? You see? So in this overall cycle, we're right here. Now, what a lot of people want is just this, but that is not how you accumulate for generational wealth. You must start before the turn. If you wait for this, there's the potential of not getting enough and it running away from you. So you must start before the turn and through the turn. And that would place us right there. Now, as you can see, if you look back historically, this band of mine, and you can grab this, guys. Let me show you where to get this. This is in TradingView. Go to indicators and just basically type Oliver Velez, and you see Oliver Velez signature MAs. All right. And then you just put that on the chart, right? And that's absolutely free. So anyway, as you can see, historically, Bitcoin has found generational accumulation periods in that zone. Everyone who was accumulating here, they're super wealthy today. Do you understand that, right? Here, a lot better off today. Here, all right? And I believe this will be no exception. And it's not that we can't blip below it either. It's not the blip below. It's the just spending as little time as possible below. All right. Now, one other thing I want to point your attention to here is that, first of all, this will always be the toughest time to buy. Only the few most will be buying there. You understand? That's when it's easy. It's not easy when it's collapsing. But you know that's the only way to do this correctly, is when the vast majority of people have been squeezed out of an asset. You see, this drop squeezes everyone out. Now it's empty. And its empty nature can now skip forward All right. But as it skips forward, it's like too many people jump on board the truck that's moving forward, and the truck gets so heavy it has to back up and shake people off, and sometimes got to back up deep enough where everyone gets knocked off almost and free itself so that it can now have its next run without you. And this is the nature of markets. These pullbacks do nothing but shake these people off to free itself. Repeat, 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 right? And so how many people are shaken off of Bitcoin at this particular point? The majority of them, all right? So I want to bring your attention to something else, though. I want you to take the blue ribbon and notice in the past when the blue ribbon has gone into the red ribbon. Oh my God. When the blue ribbon has gone into the red ribbon. Oh my God. Do you understand? So we will ultimately get that. And when we come out of that, you're going to thank your lucky stars that you were here this day. That's what I believe. But you can't wait. Notice if you wait until it gets there, you could be already out of it. You see? You don't wait for that. You have to wait. If you're going to wait, you wait for the red. And guys, look, I tell you, I buy Bitcoin every single day of my life. I do my trading. If I have anything in excess of what I need to live that day, that goes into Bitcoin. I treat it like a savings account. This is a generational savings account. And the volatility is a blessing because the volatility, as I mentioned in my last video, right? The volatility becomes a friend when you have a constant, frequent depositing into the asset. All right. When you stop that is when you don't want volatility. You want the even, smooth trend. But when you're putting in, you want you want low prices sometimes, right? Volatility. Let me just go back to this and show you real fast. This is Bitcoin in days, over days. That's days. You want to focus on Bitcoin daily, and you're going to go crazy. Because that's Bitcoin days. This is years. That's years. Okay? So here's days. This is years. And this is decades. So what you're looking at is the years part. See, this is the years part, right? That's this one. If you look too closely, you'll see this. But if you step out far enough, you know what you'll see? You'll see this. It's this that makes it the ultimate wealth generating vehicle. So let's look at it that way. And if you look at it from the decades perspective, every low is higher. Boing, 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 boing. And boing. And so it's all about your time preference, traders. It's all about what is it that, what time frame are you going to approach this thing from? Everyone in pain is really operating in Bitcoin. They're really operating from this very high time preference, this very short-term oriented thinking. And that is not how you accumulate wealth with something like this. All right. You'll always be thrown. You'll always be knocked off. You'll never keep that proper mindset that down is good. And a lot of people can't wear these two hats. It's not in them to do that. It's not in them to be the short-term trader and the wealth trader. And I think that maybe I've been a bit more natural wearing both hats, as it were, because, I started off long-term playing with my investment club and then trading. Well, I started off trading, but really with serious money from my family getting together. We played things longer term. And so that was always at the core of my beginning. And then, of course, trading as well. So I had both at the core from the very beginning. And so I think that's why more naturally, I can flip to that mode where down is good here, but in trading, down is not good. Right? And I can separate those two. Also, I've just had experience. I've had wealth building experiences with this mode of play where you ignore the days and even sometimes the years, which I did with Microsoft, Apple, Amazon, and even gold.